Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. America wins a case against India at the World Trade Organization, alleging improper use of export subsidies worth $7 billion. India's 8 core sectors see a degrowth of 5.2% in September, the worst contraction in 14 years. India's gross tax collections in the first half of the financial year is at its lowest in a decade, making it tougher for the government to meet its fiscal deficit target. The Securities and Exchange Board of India has directed all listed banks in India to disclose any divergence in bad loan provisioning within 24 hours of getting the RBI's risk assessment report. And Dr. Reddy's laboratories, along with Yes Bank, are the two nifty companies that are set to report numbers today. Let's talk about the US markets first. Benchmark indices on Wall Street ended in the red on Thursday. Sentiment was soured after Bloomberg reported that China continues to have apprehensions over a long-term trade deal with the US. But markets were lifted off the day's low after President Donald Trump tweeted that the deal remains on track. Here's Renita Young with what happened during that Wall Street session.
U.S. markets fell the most in 3 weeks on Thursday as the S&P 500 slipped on weak manufacturing data, all as more information came in about U.S.-China trade relations that made investors take risks off the table. Chinese officials have warned that they will not budge on the thorniest of trade deals. A regional manufacturing gauge coming from Chicago missed analyst expectations, and jobless claims rose more than expected. Also, treasuries and gold rose. Very good indicators that investors are a little bit nervous and seeking to store the value of their assets in safe haven trades. The U.S. dollar fell as a result. Meanwhile, earnings march on with Kraft Heinz surging after it beat analyst expectations, Wayfair plunging after missing its forecast, and Hanes Brands sinking on weak earnings. And that's a look at your Wall Street action on Thursday. In New York, I'm Renita Young for Bloomberg News.
All right, and there's a lot more to talk about in the international space, but we'll get to that in just a minute. Let's also take a look at the markets in the Asia-Pacific region. I'm joined by Rosalind Chin from the Bloomberg studios in Hong Kong. Good morning, Rosalind. How are we looking at the end of the week?
Not a great close to the end of the week and a start to the month of November. We've got to the MSCI Asia Pacific dipping into negative territory, down by just under 0.1% right now. Of course, all those concerns resurfacing about any possible long-term, at least, trade deal between the China and US. And of course, we've got Asian stocks they're essentially pulling back from a 6-month high. They had been faring pretty well in the last few days or so. So mostly trading lower on this concerns about trade. We've got China that has just opened lower. In fact, the Shanghai Composite trading down by 0.29%. CSI 300 losing just under 0.1% right now. In Hong Kong, we did have some terrible, pretty terrible GDP numbers for the third quarter. We showed a contraction of 3.2% quarter on quarter, which was far, far worse than expected. We've got retail sales numbers coming out later on Friday, and we shall see how those fare. But those are expected to be pretty dire as well. Two issues here, of course, playing on the Hong Kong economy. First of all, the protests, which are affecting things like retail sales and visitor numbers. And the second thing, of course, is the trade issue, which had been pushing really Hong Kong into a downturn even before the protests had started earlier this year. Elsewhere in the region, we've got the yen, the yen, which is holding up around a 3-week high. That is at 107.95 right now. The Nikkei 225 losing about 0.5%. Tropics down by just over 0.25%. Of course, the yen could see some strengthening as well a bit further due to the, of course, more risk aversion resurfacing on that trade concern. We've got South Korea's Kospi. Now, that is actually one of the few markets which is making gains, up by just under 1/3. We had some surprising numbers out earlier on CPI, which showed that it rebounded to be flat in the month of October, That, of course, is a recovery from its previous month, where it had, in fact, made its first ever decline. That was in the month of September. Australia's S&P ASX 200 just about flat right now, it's slightly in negative territory for a third session, with financials again among the biggest losers there. Finally, I want to have a quick look at Taiwan. That's a market we very rarely examine here. Right now, the TAIEX is just about flat, but it had, in fact, just capped its best session, really, since the end of 2012, and it rose 4.9% in the month of October, with a huge help from TSMC, which of course is a chip maker, and that's largely because of foreign buyers piling into that, contributing in fact to nearly half of the total equity inflows for the TAIEX having gained about 17% so far this year. Back to you.
Thanks so much for that, Rosalind. Now, let's talk about that international news that I was telling you about. The much-awaited trade deal between the US and China has apparently hit another roadblock. Chinese officials are casting doubt on reaching a comprehensive trade deal with the United States. This despite the two sides getting closer to sign the first phase of the agreement that Donald Trump announced. Tom McKenzie of Bloomberg News gets us the latest.
Well, we've been hearing that officials here in China are very concerned about the trajectory of travel for the long term in terms of these trade talks, particularly phases, quote, 2 and 3. Now, phase 1, of course, has been thrown to one side to some extent after the cancellation of this APEC meeting. Both sides say they're trying to find a new location to try and sign that deal, maybe in November. We heard that again from President Trump. But the key concerns for Chinese officials going forward are this. One, they're not going to budge on those key issues like structural reforms in terms of state subsidies, for example, and their industrial policy. Now, we've had a sense of that, of course, from really day one of these trade negotiations, but that's been re-emphasized by Chinese officials. The other concern they have, frankly, is the volatility, the impulsiveness of President Trump. They're concerned that they might make concessions only for President Trump to pull back at the last minute and leave them with a loss of face. That's another concern. In terms of tariffs as well, and China has long said that it wants a removal of tariffs. If you want a complete deal, you have to have all those tariffs taken away by the US, currently on about $360 billion worth of Chinese goods. Now, the problem there is that the US wants to keep at least the bulk of those tariffs in place as some kind of enforcement mechanism to ensure that China lives up to its side of the deal. So there's a big impasse on the question of tariffs. Now, China says it's willing to continue to negotiate past phase 1 if we do indeed get phase 1. But indeed, it does seem like there are big questions now as to how much progress can be made after what is meant to be the easiest part of the deal, segment 1, which of course involves things like agricultural purchases, intellectual property protection, and a currency pledge by China and the US. And again, we're still waiting to know when and which location is going to be chosen for a signing of this deal if it comes to that.
All right, now all of this revolves, of course, around President Donald Trump and his negotiations with China. But speaking of Donald Trump, his presidency now stands on a sticky wicket. The House on Thursday voted 232 to 196 in favor of proceeding with the impeachment inquiry that is already ongoing. What will follow next is more public hearings and testimonies from some of the key officials in Trump's camp. Jody Schneider of Bloomberg News brings us the implications of this move.
It sets out basically a roadmap for moving ahead with the public phase of the impeachment inquiry, and it also legitimizes it. There had been criticism from Republicans and from President Trump that this inquiry was illegitimate, that it was unauthorized because there had not been a vote. And basically, the White House officials were being told not to cooperate, either in terms of giving testimony or documents. So now there's been an official vote, it's authorized, and it also basically is a very clear signal that the House intends to move forward with an impeachment vote, which would then end with a jury in the Senate. Though the Senate is unlikely to impeach a sitting Republican president, it still is setting this up to be now a vote in both chambers at some point. And of course, this means this is occurring as President Trump is waging his re-election campaign.
Yeah, in terms of that, what are the dangers for the president, either in actual impeachment or the risks to that campaign?
Yeah, it's going to be very very difficult to try to concentrate on much else, Paul, except this. This is going to consume the White House and President Trump. He's going to have to try to both bolster his support among Republicans, both in terms of fighting off the impeachment and certainly, making sure that the Senate goes along and votes to retain him, not to remove him from office. But also, he's going to have to do this as he tries to seek their support on the campaign trail. It's also going to be very hard to get much else done in terms of things like trying to move forward with the NAFTA agreement to get a vote in Congress on that, as both Congress and the president are consumed with the impeachment fight. He's also going to show that he needs to govern, it's going to be more important than ever that he shows that he is up to the task of governing the country, even as this impeachment inquiry occurs. Of course, he will continue to make the case, we can presume, as he has just in the last 24 hours on Twitter, that this is a witch hunt and that he is being unfairly targeted.
All right, we'll bring you more updates from the testimonies that come in as and when we get them. For now, let's move on and see what else is making headlines across the globe. Sue Keenan of Bloomberg News brings you the First Word headlines.
The House of Representatives has voted to proceed with a presidential impeachment inquiry. Now, the vote played out along mostly partisan lines. It sets in motion a process that will begin with open hearings to investigate what Democrats say is an abuse of power by President Trump, and that pertains to pressure on the Ukrainian government to undertake an investigation for his own personal political benefit. Islamic State, meanwhile, has confirmed the death of Abu Bakr al-Baghdadi and named a new leader to succeed him. Abu Ibrahim al-Hashmini al-Qurashi will become its head. The group threatened to retaliate against the U.S. for killing al-Baghdadi and referred to President Trump as a, quote, senile old man. Al-Baghdadi was the highest-ranking terrorist leader targeted by U.S. forces since al-Qaeda leader Osama bin Laden was killed in 2011. And in Lebanon, anti-government protests are continuing even after the country's prime minister resigned. Security forces struggled to open roads as protesters continued a civil disobedience campaign. Lebanese President Michel Aoun pledged that new government ministers should be chosen based on merit and expertise and not political allegiance or to please sectarian leaders. An investigation is underway in Pakistan after more than 70 people died when a fire broke out on a moving passenger train. The blaze was caused by a passenger's small gas stove that exploded. It set on fire other gas cylinders that were used as extra fuel. The train's conductor said the train stopped within 3 minutes of the first signs of fire. Passengers said it took the train nearly 20 minutes to come to a halt. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn to the trade setup for the day in India and also what's happening in the futures and options space. To tell you all about that, I'm joined by Darshan Mehta. Thanks so much for joining me, Darshan. We're looking at some gains that came in yesterday. It actually ended off the day's high, but we're looking at actually a bit of a cut at the end of the week.
Yeah, so the SX Nifty is indicating minor cuts because the global cues are slightly weak. Asia's opened weak, so probably we still have almost 2 hours to go. Things might change, but as of now, the SX Nifty is indicating a downtick of 20 points. How did we end up in trade yesterday? Pull up the Nifty and the other indices. Obviously, there was more traction on the mid-cap end of the market. The Nifty did start very strong, but didn't manage to end. The Sensex, on the other hand, hit the record 40,000 mark in trade. The small cap also did manage to move. Pull up the Nifty Bank and the Nifty PSU Banking Index. The Nifty Bank managed to move up almost 0.26%, but the Nifty PSU Banking Index was up almost close to 4%, led by a 7 to 8% move that came in on SBI. Now the ADRs ended weak. ICICI was weak, Vedanta was weak after falling. Tata Motors has managed to inch up again. HDFC Bank was weak again. Wipro surprisingly was up almost 4%. Infosys was up 3%. So that's the ADR set up. How did the flows pan out? Both FIs and DIs were net buyers in the market, and the FI buying over these days has been happening because of certain blocks that are happening in a lot of these stocks. How did individual stocks contribute? The Nifty was up 33 points. So Infosys, SBI, HDFC and Yes Bank contributed. Yes Bank was up 25% post the news of the $1.2 billion infusion. HDFC Bank, ICICI Bank, Reliance and Axis Bank, the heavyweights actually didn't contribute. Now, in terms of where positions are taken, we ended the series. This is the new series. So fresh longs were seen. Open interest build up was 69%. The index of fresh buying. As far as the Nifty Bank is concerned, that also open interest build up was 28%. The base is low, obviously, and this will get revised. As far as where we are standing, we are at the 11,900 mark in trade, but call writers are active from levels of 11,800 to high levels. They believe there could be some bit of cooling, and put writers are active from 11,600 right up to higher levels. So the trend currently is certainly on the bullish side, but there is resistance coming in at higher levels also. So this is what happened in trade yesterday. The VIX was down almost 2% yesterday. The market wasn't very volatile, so the VIX didn't move. The PCR and the stocks that we need to focus, the PCR came down to 1.41 versus 1.48 across all series. And finally, some of the stocks that you need to watch out for and how they managed to move. So Bharti Airtel yesterday saw fresh buying. Open interest build up was 71%, was 88%. PVR saw a bit of fresh short. Tata Global post the numbers reacted positively, and Ujjivan was down post, indicating that the SEBI has given them the approval for the IPO of the small finance bank.
Thanks so much for that, Darshan. All right, in further proof that the Indian economy is facing a downturn or a slowdown, core sector growth of 8 major industries in September has contracted the most in 14 years. Pallavi Nahata has more details in this report.
High-frequency indicators suggest that economic growth remained weak in the July-September quarter. Core sectors ranging from cement to steel and energy contracted the most in 14 years in September, indicating the severity of the ongoing industrial slowdown. The index contracted by 5.2% in September, according to data by the Commerce Ministry. The index continued to moderate through the quarter, growing by 2.7% in July, remaining flat in August and contracting in September. Almost all sectors within the index showed a contraction for September. Refinery products, which have the highest weightage in the core sector at 28%, contracted by 6.7% in September compared to a growth of 2.6% in August. Coal output contraction was the steepest at 20.5% in September compared to a contraction of 8.6% in the previous month. Fertilizers, which have the lowest weightage in the index, were the only component to register positive growth, growing by 5.4% against a growth of 2.9% last month. These figures have created concerns over the possibility of Q2 GDP growth slipping further from a 6-year low of 5% in Q1.
Also remember that core sectors account for 40% of the IIP, the data of which will be available next week. So we'll have to say what kind of bearing that will have. Now, let's talk about other news in the banking space. In the aftermath of the huge credit card data leak on the dark web that happened that was reported on the 29th of October, regulators, investigators and banks have swung into action to safeguard and probe the case. Advait Rao Palepu has all the details in this report.
Public sector and private bankers will be meeting with the National Payments Corporation of India on the 31st of October to discuss and review the ways forward after reports emerged that 1.3 million card details belonging to Indian banking customers were leaked on the dark web over the past few days. On the 29th of October, security researchers at the Singapore-based Group IB informed technology website ZBNet that 1.3 million card details, credit card and debit card details of Indian customers had turned up online on a website called Joker Stash, which essentially allows criminals to buy and sell card details for a price. According to the report by ZBNet, The card details are being sold at $100 each, making the entire tranche worth over $130 million. Now, sources close to the development told BloombergQuint that bankers have been reviewing the tranche of card details that were uploaded, and based on instructions that were sent by the Reserve Bank of India on the 29th of October itself, they will be looking at measures on ways to sensitize their customers as to the leaked information. They will also review the leaked details to check the genuineness of the card details, and will also reissue cards in case they find that some of these cards were compromised that belong to their customers. Further, sources close to the development have told us that police officials have begun investigating the matter, but it is at a preliminary stage, so therefore explicit details about the origin of the attack and how these details were uploaded and from where are yet to be disclosed. Further, this is also the second largest breach in recent years of customer card details in India. Back into October 2016, around 32 lakh card details were leaked after a malware infected the State Bank of India's automated teller machine network.
All right, as always, we'll bring you more updates when we find them. But let's turn to earnings now. It was a weak quarter for Indian Oil Corporation. Operating profit as measured by EBITDA for the state-run refiner fell the most in 14 quarters, while higher inventory losses dented the bottom line. Nishant Sharma caught up with the company's MD and CEO Sanjeev Singh and began by asking him about the factors that led to the lower gross refining margins. Listen in.
Predominantly because of the lower prices of crude quarter-to-quarter basis and the related product prices, which also led to the lower GRMs. We had a significant inventory loss, particularly if we compare with Q2 of last year, and there was a delta of close to 4,000 crores, which probably is more than the difference what we are seeing in the profitability between the two quarters. The GRMs had been suppressed apart from the inventory loss, also because of the lower cracks, which is the difference between the mainly, I mean, if you talk about the two major products, gasoline and diesel, and the crude prices. Now these are, while the crude prices are driven by demand supply as well as the geopolitical situations, predominantly the product cracks or the product prices are driven by the demand and supply, which had been fluctuating, not only because of Indian conditions, but predominantly because of global conditions and the demands in different parts of the world. So we had been seeing, I mean, the quarter one, the cracks were extremely poor. Quarter two, we saw a little improvement in the cracks, and which are now seem to be improving. So we expect the next quarter we should be having decent GRMs and better profitability.
Government aims to open fuel retailing to non-oil companies. What does it mean for you? Does it mean kind of a threat?
Not at all. I won't say we are seeing it as a threat, but let me share. I mean, in a very short response, we are seeing opportunity to provide more value to the customers. I think it will bring in more efficiency in the system. It will bring in more competition to everything. I mean, even today the retail sector or petrol and diesel retailing is open for private players, open for multinationals, and they are already present in the country. The way we are doing pricing today, we are floating with the global prices. So we are already competing with the global players in terms of price. We are already competing with the global players in terms of the retail marketing and services. So when it opens up for even for the medium size or the small size players, I think they will bring in a little more efficiency at the retail level. And it will definitely open up more opportunity for the large players like Indian Oil. In this line of business, what is extremely important is to consistently, reliably supply fuel 24/7, 365 days in a year, which requires not only the apparent or the face of the marketing or the face of the retailing, which requires a very robust and reliable supply chain and complete system behind the scene.
Now, if you look at the global refining margins, they continue to be weak. How do you see that impacting players like BPCL and other OMCs?
I think because, you see, whenever the situation of inventory losses are happening, Indian oil is impacted most because we carry the maximum inventory. We have the most inland refineries, so all of our stock which is inside the pipelines or on the ships undergoes the impact of inventory loss. And the same thing happens when the situation is for inventory gain. Unfortunately, it happens when the prices are going up. So while I'm sure that other oil companies will also get impacted, but probably the impact will be less.
Any planned shutdowns for the second half?
The refineries, as I said earlier, a couple of refineries have undergone shutdown and they have upgraded themselves. Final hookups are still going on. So these are all planned shutdowns and which we have factored in to meet the requirement of BS6.
All right, now Yes Bank was in focus yesterday, as you know, if you've been following BloombergQuint, because it released a statement that said that it had received a binding offer worth $1.2 billion from a global investor. Now, it's going to be in focus today as well because earnings are out and Yes Bank may report a net loss this time owing to high provisions and deferred tax reversals. However, aside of that, the bank's commentary on the proposed fundraising will definitely be keenly awaited. Shefali Malik is here to take you through the expectations.
We're expecting a loss this time around from Yes Bank, a loss of about 400 crores versus a profit of about 965 crores in the same quarter last year. Its net interest income is expected to be down by about 12% on a YOY basis. And the reason for the pressure on the bottom line would be accelerated provisioning this time around as well because of the continued pressure on the asset quality. So we're expecting slippages of around to be anywhere in the range of about 5,500 to 6,500 crores versus about 60 to 32 in on a sequential basis. Also, we'll look forward to the watch list as well this time around and what kind of guidance the management gives with regards to its asset quality. And aside of that, they've already reported their advances and deposits growth, which the advances degrew by about 4% on a sequential basis and deposits by about 7% on a sequential basis. Margins as well are expected to come off marginally on a sequential basis. But more importantly, all attention would be with regards to the fundraising. So the bank informed the exchanges that they have received a binding offer from a global investor for an investment of about $1.2 billion. So any commentary that the management gives surrounding that will be the most important to look forward to, whether it is one global investor or a clutch of investors. And the bank also said, remember, that they are in advanced discussions with other global and domestic investors as well. So all the questions will be directed towards the management with regards to fundraising only. So that will be the most important thing to look forward to, and we'll keep an eye on that when the bank reports its earnings.
Also watch the stock price. The stock, having gained about 40% intraday yesterday, ended about 24% higher. All right, let's talk about the other earnings now. Dr. Reddy's will be the other nifty company reporting its earnings today. Operational performance for the company is likely to remain stable. Darshan Mehta is here to take you through the street expectations. Darshan, what are we expecting?
Yeah, so it'll be muted this time around. Steady growth, 10%, 11% top line growth, 10% bottom line growth, and EBITDA margin just pretty much stable at close to 22%. Now, the internal factors, first of all, both the domestic as well as the North American business are expected to grow anywhere between 10 to 15%. So that is decent. The rest of the world as well as Europe are expected to see strong growth, while Russia is expected to see weak growth this time around. The intensity of new product launches was very high in this quarter, and that is why the traction will continue in some of the North American markets. But Suboxone is something that we need to watch out for this time around. The share is likely to remain stable, so on a year-on-year basis the growth will definitely come in, but on quarter-on-quarter it will be stable. Some of the legacy products is facing stiff competition. The issue as far as ranitidine is concerned, the discontinuation, that is something that we need to ask the management, but that will definitely impact the numbers. Recovery in the PSAI segment will aid the margins this time, and management update on the Duvada facility as well as the new product launches are important to watch out for.
Thanks so much for that, Darshan. All right, let's turn to the stocks that you have to watch out for in trade today. Soumit Sarkar is joining me now to tell you all about the stocks in news. Good morning, Soumit. What are we looking at this Friday?
Good morning, Alex. I'll start off with the earnings. Thirumalai Chemical, a weak set of numbers. The revenues dropped nearly 26%. The net profit was down nearly 81%. Margins came in at 8.5% due to higher raw material prices. And raw material prices as a percentage of sales, it increased to 69.5% from 60% last year. And that's the reason we have seen this drop in margins and the drop in net profit. The net profit drop was also attributable to higher finance costs and depreciation in the second quarter of financial year 2020. Spandana Spurti reported a strong set of numbers. The net interest income rose nearly 26%, while the total income was up 42%. Profit, however, dropped 38% because of some deferred tax expenses, which increased by nearly 3.6 times compared to last year. Gross loan portfolio and AUM growth was strong at 37%, while the disbursements increased by nearly 45% compared to last year. Net interest margin for the NBFC stood at close to 18.6% versus 16.2% last year. Laurus Labs reported a strong set of numbers. The revenues were up 21%. EBITDA increased by 82%. Net profit jump was 3.5 times on the back of lower tax rate. Margins came in higher at 19.3% because of a lower raw material cost. Now, higher operating leverage and softer key raw material prices of China aided the margins of the company. Blue Dart Express, weak revenue growth that the company reported. Margins, however, improved compared to last quarter. The net profit was impacted because of higher depreciation and finance cost, while the management commentary was cautious post the earnings. Other than this, the stocks to watch out for would include IndusInd Bank, where they have finalized the potential candidate for the position of MD and CEO, who will be taking over from the start of the next financial year, and the bank will make the required disclosures to the exchanges post RBI approval. Vodafone Idea, where the company came out with a clarification saying that they are not aware of any news of Vodafone Group exiting the Indian operations. Ahluwalia Contracts, because they have received 3 construction orders worth nearly 520 crore rupees. And lastly, Indigo and SpiceJet would also remain in focus because jet fuel prices have been cut for the 6th consecutive month, and for the month of November compared to last year, the ATF prices have been cut by nearly 17%. Now, this is the sharpest cut that we have seen since May 2016, and this lower fuel prices will benefit the aviation sector because fuel cost accounts for nearly 1/3 of the total operating cost for an airline company, and these lower fuel prices will give in some relief for the aviation companies that have been currently seeing a lower passenger growth rate and lower ticket prices.
Thanks so much for that, Somit. Let me take you through a few stories that you'll find on the website BloombergQuint.com. We talked about the core sector data. There's more bad news for the government in terms of the gross tax collections, the growth of which in the first 6 months of the ongoing fiscal hit a decade low in a year when the government is almost certain to miss its fiscal deficit target. Gross tax revenue in the April to September period grew 1.5% year-on-year to 9.19 lakh crore rupees, according to data released by the Controller General of Accounts. In other news, the US has won a case against India at the World Trade Organization alleging improper use of export subsidies valued at more than $7 billion. The WTO's dispute resolution panel agreed that India gives prohibited subsidies to producers of steel products, pharmaceuticals, chemicals, information technology products, textiles and apparel to the detriment of American workers and manufacturers. That's what the US trade representative in Washington said in a statement yesterday. All right, that's all you need to know going into trade today, but do stay tuned. There's a lot more coming up in just a short while. This is Bloomberg Quint.
So people, when they